Well, Super Thursday certainly proved pretty super. What a day, huh? So the Fed, bit of a roller coaster ride as people saw some sort of peak in interest rates or inflation, only to reverse that, and US dollar got bid. Then the Bank of Japan came out and last week said they would defend 145. In the conference, they made no mention of that, so the yen weakened up and through 145, only for the BOJ to actually intervene in the market. And we'll have a look at the charts in the morning in a moment. But yeah, first intervention from the Bank of Japan since 1998, so 20 odd years since the BOJ has intervened, and what a day that was on the yen. The S&B moved, and the Bank of England moved and got super aggressive in their commentary, and so the UK bonds also took off. Surprisingly, the pound didn't do much on the back of it, but yeah, their interest rates are going bananas. So that leaves Japan out on its own with negative interest rates now that the S&B have moved to positive, and Euro's also up. Surprisingly, the Aussie dollar is pretty strong overnight, considering that commodity markets, as we can see here, are all still a little bit weaker overnight. So, global recession fears are certainly hitting the stock markets, and we're seeing stocks come off globally, and that's going to continue. As we can see, there's the Aussie, China, S&P, all weaker on the day, and we'd expect that to continue. I think we're a long way from the bottom of the stock market, and any rally such as that should be sold into. As I mentioned, bonds sort of took off. You've got here, this is the US bonds, sideways after FOMC, but then took off on the Japanese news. And this is the Bank of England's move. You can see bonds globally all having a cracking day. But with the risk-off environment, as the market looks for safety in the global recession fears, and bonds are tracking higher, I expect that to continue. And the US leading the way. Here we can see the yen, and the yen is now starting to also be attractive in terms of safe haven flows. So the Japanese government bonds, especially in a recessionary environment. Against the US, it didn't do as well because of the that flow into the US Treasuries, but we can clearly see that it's outstripped all the majors as the yen and the Bank of Japan intervenes on the yen. And I would say that this long-term run on the yen, which has been going for quite some time, since the last 2 years, that weakness in the yen is looking to reverse, and you want to be trading it, buying yen against a weaker currency, such as the euro or the pound. And as I said, surprisingly, the Aussie dollar has got a bid with the weakness in currencies. Weakness in commodities, and all the other countries well more advanced in their interest rate hiking cycle, more advanced than Australia is. I'm surprised Australia's got that bid. Anyway, that's where it's at. US dollar should continue for the short term, but it is getting, it's dangerous to trade out here. Looking for a long-term trade out here is, I think, madness, but I would expect the US dollar to have a bit more upside before a natural retracement or pullback, as the market never trades in one direction forever. You will have that natural pullback as we're The next FOMC is the 1st of or 2nd of November, so that's 5 or 6 weeks away. I would expect the US dollar to track up and then back down again, and then run into FOMC. And we've got the US inflation numbers in between then, so this pattern I would expect to repeat. I've had this on the euro dollar for many cycles. I think it's around 10 now, and certainly well 18 months of it. Expect that to continue, and 95 may be the target in this current cycle. So fun times. Week ahead next week is pretty quiet in comparison to this week as we run into the end of the month. Stay safe, guys. Enjoy your weekend, and we'll see you next week.